Good morning, everyone. Thank you for the introduction, and I hope you are all well and healthy. It's always a little bit more challenging in times of pandemic than before, as you probably know. We've chosen a title called Cover, Cost and Crisis, the Bermuda Triangle of Trade Credit Insurances, or how you might lose your insurance cover altogether. And I think all of you already have a picture in mind what that could mean to you, your portfolio, and probably for next year's credit management operations. But just let's get started here. We've been in business as SHS Viveon for more than 30 years, and I'm part of SHS Viveon for more than 22 years right now. So why do we think we can just give you some insights into that topic? Because over the last 20 years, we've been operating with global acting clients and companies, large corporations, as well as mid-sized SME companies in Germany, Austria, Switzerland, mostly in Europe, of course. But anyway, we have been in contact with many credit managers who operate international and national portfolios in order to maximize security and profit for their companies. It's always been mostly a global challenge. Most of our customers operate international portfolios, and of course, it is extremely challenging to communicate in international teams and international customers as well. We see many users running credit management software in these days with a smile on their face because they've got the flexibility, or better, at least a huge advantage in compared to credit management teams who have Excel as a core and main tool. But now let's move on. A triangle and the Bermuda Triangle. I think most of you know that picture, right? The Bermuda Triangle is known for its mysterious and predictable incidents, and a lot of stories attached to it. It looks a little bit scary. It's a huge sea, and you don't have that much orientation. The Bermuda Triangle is known for centuries, and it's always been a surprise that the unthinkable has happened. We all know the unforeseen events might happen, but generally we are surprised about either the event or the effects from the event anyway. It's fate, and the Bermuda Triangle calls for the next victim. No, it isn't, believe me. We've got always one situation, the cover, right? The cover of a credit reference agency. Without warning, it disappears magically. That is what happens at the Bermuda Triangle. Ships, or in our case, the cover disappears magically. And it looked so beautiful in the CEO's weather forecasts for 2020. The route was set to a paradise archipelago on a nice touristy route with a promise of tropical weather in some parties, right? That is how we started in 2020. The vehicle we have chosen to arrive securely was a huge vehicle called or named TCI, and the booked class of travel was business class with a nice scent of luxury, wasn't it? Out of the blue, the covers get cancelled, oh my dear, or heavily reduced as a result of being in the heavy sea. And we are sitting on our rescue vessel now without proper navigation skill, having nothing but a whistle only. It's difficult times. And now what happens? Cost. It's expensive to sail the seven seas. We have international business, right? We are not just operating on a global portfolio generally, but we have to have a credit line management across the continents and across the seven seas. And if we want to have the security to get rescued anytime, it doesn't make it more affordable, does it? It's always a more costly situation if you travel the unknown, as if you're just working in your foregarden. So that's always a aspect which has been already factored in. Yeah? You have chosen the vessel named TCI to go on to your journey, and it wasn't the most cheap one. But anyway, now you booked the service, and you're in the situation that you have to get rescued somehow. And the additional services you might consider to use, like top-up services, is costly too, right? Even today, and it's not getting cheaper, and it's not getting available quicker, and that is what we have seen so far in the last six to 9 months. And now I have paid for a service, and I don't get the service I was promised to receive. No? That's complicated, really complicated situation for all of us. And that is called crisis. Now we've got a crisis, no or few options. And we don't have right now a proper vehicle to arrive safely at our dream destination. That is exactly what's happening now. We were talking about the CEO weather forecast for 2020. Nice paradise weather with with maybe a little bit of a shaky water, but nothing unconventional or nothing unexpected. And what's happening now? What's happening now is that we are just trying to arrive safely in the harbor. In words of credit management, we have been left alone without a professional solution in the shaky days, and we have to find a way to execute your company's turnover target. There is, of course, an understanding that the crisis does have an impact on the annual target, but for sure there is no acceptance of a full loss of the turnover target, right? No one will understand that, and that's not what we all are working for. But we have to keep in mind it is more complicated than before. Maybe you are lucky and you have a crew of motivated passengers on your journey, your colleagues who are courageous enough to encounter the unknown territory of working credit lines or operating credit lines without having a cover. But sometimes you're probably just accompanied by a bunch of pensioners with a full board expectation. So that doesn't spend added value, and that doesn't make your life better. So it's always a really uncomfortable situation of how to operate trade credit insurance in dangerous and mysterious times, right? Any of the scenarios I've been talking before, it has lots of challenges incorporated. That's as it is. Why do we use TCI cover? Generally, just to recalibrate or to calibrate everybody for this next 20 minutes. Why do we use TCI cover? In general, what we have seen over the last 20 years, there is the aspect of being international. Having a global footprint means you should have to know all the international legislations, or you have a target in growing in new and unknown markets. Speak all the languages, right? And now, in times of crisis, you have to know how the crisis hits your special market in Asia or your specific growing market in Latin America. You have to look into more details for those countries, and that is the reason why you generally outsource your credit management and the credit management capabilities to the trade credit insurance. They do have the specialists that can cope with international clients, and they know the local decisions, the local subsidies, the local government, and their plans and strategies to fight crises. That is exactly why generally you take the cover of a trade credit insurance to reduce the complexity on your side and let the specialists do their business. That works as long as the crisis is not international. A local crisis, fine, that's why we take cover. But if we've got an international crisis and all markets collapse at the same time, it gets really, really challenging. The second aspect of why using trade credit insurance is generally increasing the number of your clients and new clients or returning clients. That is always a challenge because you have to identify the client, you have to make sure that you are dealing with the right entity. There is very often a local process available to identify customers, clients, not talking about fraud, but just making sure that you deliver the goods to the right company. Anyway, that is generally one of the targets. You've got increasing your basis, getting more customers satisfied, delivered, and so on. Generally, we have multiple stakeholders we have to talk to. So it starts with the client, of course, from your sales side. Again, international customers and international situations really enforce different ways of communication. It's easy to declare a client as a good client in Western Europe because we've got lots of information available online, real-time, flowing in, flowing out of systems. It's quite complicated to do exactly the same with a client in the Middle East or Asia. Same applies to the identification of clients in those markets, but you do have different stakeholders in the Western Hemisphere. You probably talk to your sales guys and they can just provide that information to a client. Oh, you're fine for a credit line of 250,000 euros. And by the way, we get covered by Euler Hermes traders or co-funds, right? They fully understand that it's a typical behavior, and nobody is really surprised about that. It gets differently and more complicated in the Arabic world, where you say, "Oh, I don't trust you because I insure you." So you have a multiple stakeholder management which you have to know about, and you have to really consider that how to talk to your clients. And that's not only on sales; that happens on credit management side as well. And of course, you take cover because you operate high risks. You're not selling a toothbrush. You're not selling a bag of apples. You're generally selling quite valuable goods and services to your clients. And those goods and services generally have a remarkable manufacturing costs attached. And if something goes terribly wrong, you still have to pay your supplier, and not getting compensated for that is exactly the reason why you use it. And now in a global pandemic, everybody is affected. It's not one market. You can't level out these situations. Everybody from China to Peru and from Norway to Australia is affected by this crisis. And now it gets really, really complicated. There is no move possible to just shift your risks from Norway to Peru, or just not accepting new incoming clients. That's exactly not what you should do in times of crisis where you need every penny, right? And then the trade credit insurance steps in, right? And what are the options of a trade credit insurance? And it's really not relevant which one it is. One of the three major ones or smaller ones, even in Excel of loss policies, the regulations get tighter. And yes, there are rules in the fine print that really make your life complex if you're running an Excel policy in times of crisis. But what are the options of a trade credit insurance? Of course, premium. It's always the first thought: increase premiums. Adapt the premium situation so we can rescue more clients afterwards. Unfortunately, the contracts you have been closed your insurer, and that's lucky for you as a client. Work both sides, and an increase in premium is on the short term generally not the case, because if you are lucky, you've got a 3 years contract, or you do have a 2 years contract, and if you have been in that market position that you have got a new contract by end of 2019, there's still 1 year left with that scale of premium, right? So nothing to fear. Okay, new contract, and we see that on the market already contains the adjustment of the premium right now. So even if you've got the premium security for 2020 and 2021, you can be more than insured that 2022, when your renewal is upcoming, don't be surprised about the premiums coming up. All right, but that's naturally because they are just working with math, nothing else. Yeah? TCI has got restricted tools to cope with the crisis. They have to react on increased risk, of course, as they always have to ensure the stability of their business. We don't want to see a trade credit insurance fail, don't we? And the reaction is fully understandable right now. It is absolutely understandable that they tend to increase premiums. No one can afford to deliver it to a client who can't pay. And no insurance can ever take over that risk in a crisis. And especially if that crisis is not visibly coming to an end. There are very positive signs that this pandemic will end in 2021. But, you know, you're a credit manager. We want to see evidence, right? In any case, the decision based on logic and pure math is generally a correct one. It's science. It's not from a gut feeling. We are just based on science here. One of the other options a trade credit insurance got is, of course, cancel the covers or reduce the risk, risk-score the clients, and cancel covers in the most affected industries. And we have seen, of course, exactly that happen. Travel and air travel and hotel travel and restaurants. We don't have to talk about it. Yeah, you just open your daily newspaper and you see all the nightmare stories just popping up here. That doesn't help us as a client, not at all. At least in the initial phase of a crisis, we are secured and safeguarded a little bit. When the crisis hit, we still had our covers and the turnover was secured. And what happened next? Okay, we reduced it. What comes next? Hard to say. But we think we will see an adjusted level of covers within the next 6 to 9 months with trade credit insurances. We don't see a full reduction of the covers, but we see a focus on those clients who have been already, or your buyers who have already been in a very powerful situation. Big players in the market will get some covers. They are transparent, publishing their key facts and their financials. That is quite helpful for the trade credit insurance, but unfortunately, that is not 100% of our portfolio. Our portfolio contains, if we are lucky, 25% of blue chips and very safe companies, and the rest is emerging new, fresh clients, big wins from sales of the last year, which we don't know yet very well, and so on and so on. So what's going on? We are in shaky times. We don't know exactly who is going to survive and what's coming up. And we've got the problem generally because we don't know about the future of the business you're dealing with. No one knows, and sometimes you don't even know about the future of our business. Right? That's sometimes really, really annoying. But how can we get that a little bit off the table? It's complicated, but we have to take over responsibility. Credit management, and we as a company dealing with clients, we have to take over more responsibility. We will have to start talking. Why? Because we have a closer contact to our clients than a trade credit insurance probably has got. they just, as I said, they just look into the math, because it's a huge amount of clients they are dealing with, and they have to make decisions, thousands and thousands every day, just based on math, not based on communication. We can talk to our clients, right? And we can ask for more information. We can really step in a project. We can really guard the client. If it's a smaller company, you can probably give some advice. What can you do and how can we collaborate? And that is what we've got as an advantage compared to a trade-related insurance, right? Communication, human kindness, and just being present and talk to someone. What we are going to see, and that is pretty sure, that the demand of enforcing rules will just, right? Trade credit insurances will demand precision in executing the obligations. And what we have seen in the last crisis, back in 2008, exceptions and goodwill will really come down to the very, very low figure of 0. So be prepared. That's exactly what's going to happen. We've got the challenge. We've got to follow the obligations. And our challenge generally as clients is we have a huge multi-country portfolio. That doesn't make things easier. We have to understand the exceptions, and that's really extraordinary in terms of crisis, created by legislators and insurers immediately. We have to understand that there are situations. I just heard from one of our clients just a couple of days ago. We are providing our goods and letter of credit with some specific Incoterms, right? And that means the goods are released after and just leaving the harbor area when an official from the harbor approved that the money was sent. I'm not very good in Incoterms, but there's a very static process and a procedure behind that. And it's a very, very, very safe way to provide goods abroad. And due to the crisis, this particular harbor authority decided no one is going to see any person live from an arriving vessel. And so they released goods without the enforced checks, right? That's scary, but you have to understand it. And now it's up to you. Is that a breach of obligation? What would the insurer say? So that's exactly what we have to cope with. It's complexity and the understanding, and to deal with the exceptions made by local authorities, local governments, and so on. And last but not least, right? You still have the same people. You have got your colleagues, the staff, but in home office, or even worse, in quarantine. And now they don't have access to all the tools they used to work with. Sometimes it's as complicated as dedicated IP addresses have to just communicate with each other. That quite often applies in letter of credit tools. And so on. You can't run a bank account from your home computer probably. And so that is just opening up another really weird situation. And I'm pretty sure that you have encountered all of that during that crisis. That's our challenge. And our tool is Excel, right? Congratulations, we have to work with Excel. Oh my God. And what's a result of that? You've got additional risk. You've got really additional risk which you haven't seen before. You might lose the individual cover because of breach of an obligation, which is unexpected, or which unexpectedly arose from a government decision to open up harbor authorities. And yes, that doesn't really is in the interest of the trade credit insurance. It's a governmental decision, but you have to make sure that you follow the obligations. It's get complicated, really. So in the case of the event of loss, you lose the insurance volume due to that, because the goods just left the harbor site, no one checked it, It's a problem, and it's been stipulated differently in the contract. Complicated. Generally, this happens once in a while, right? Not very often. We encounter a incident once a month, twice a month. We've got a very well trained and educated team. But now you've got hundreds of those cases on the top of your desk, and you have to cope with it. The number of cases to make proper decisions is much too high to operate with your team, because you made the decision, okay, we go with the trade credit insurance, so we have a minimal sized team for trade credit insurance. That's exactly hitting you now. And if you are in a systemic breach of obligations, the worst case is that your portfolio gets fully canceled. It can happen. We haven't seen that so far. We have seen industries getting canceled fully in the last 3 months, but we haven't seen a portfolio collapsing so far. But you never say no, never say never again here, right? Yeah, and you pay the premium without holding a cover. That's exactly the bad message you have to transport to your CEO, CFO. We paid a insurance premium for 9 months, and now we've got no cover, and we've got an incident. That is, if a systemic breach of portfolio obligations just retracts your cover. I have seen that twice in my 22 years in credit management, and it was extremely painful for the full credit organization of those specific customers. That was a nightmare. But you've got options as a trade credit insurance client in turbulent times. Of course, the first thought everybody's got is there are other collaterals available. Just buy additional collaterals. Yes, good idea. They are available. Of course, they are costly, but in the end, if my margin is good enough, I might invest a little bit in security. All right. But you need an initial underwriter who is providing a credit line. Generally, there are exceptions, but generally you need an initial underwriter. And if those initial underwriters reduce their cover, the top-up cover gets reduced as well, right? Of course, this tool of buying additional collaterals, CHUP, AIG, or you name them, you probably know more than I do, are not the cheapest one, and they are not easy to operate. That really reflects back to my initial saying that we've got a reduced team in credit when we run trade credit insurance, and you generally need more people to operate top-up covers. Astonishingly, the reduction of payment terms worked quite well in these times of crisis. We have seen a couple of companies who just reduced the average industry-approved payment terms from, let's say, 45 days down to 30 or even to 20 days, and it worked, right? Most or some clients really accepted that, but again, there's a caveat. It's only working with those clients who are financially sound and used to short payment terms. That might work probably in some legislations in Western Europe, the Netherlands, Norway, Germany, Poland, right? That's accepted there. It gets more complicated looking into France, looking into Italy, not talking about Turkey and the Far East and other legislations. And of course, it is always depending on the industry you are maneuvering and you're working. So it's exactly an issue. If your main buyers are from the hotel business, there is no chance to increase payment terms right now, right? Anyway, if you've got the chance to recalibrate your payment terms today, do it. It just releases a lot of credit line, and it helps you out to safeguard sales, and your CEO will be happy. It's easier said than done, but there is a move in the market to accept that. That's interesting. I wouldn't have bet on that, but it's working. Yeah, communicate. Start communicating. I already said that. That is what we can do better than trade credit insurance. Trade credit insurance is pure mess. They've got all the balance sheets. They've got all the nice and cool tools to calculate ratings and scores, and they crawl the web for any information available. But there is one skill missing: talking. So we are talking to those clients. Talk to them, get their messages heard, try to understand their issues, and find individual solutions. That's really interesting. What shall I say, right? Lucky those who've got a credit risk platform with the capability of automation, right? Automate whatever you can. You need now more than ever a 360-degree view on your full portfolio. Really, you need 100% operational excellence, and you have to sort out exactly those tasks that need your attention and the attention of a specialized credit team, right? Yeah, that's exactly what's your options. There is not much more. You can't stop doing business. Search and rescue is near. As I already said, what do you have to do? Get a view on your full portfolio, and stop dealing with the top X% of your portfolio only, or just operating key accounts. Of course, that is business as usual, but not in times of crisis. You have to do that. Get a view on your full portfolio. Enable your team to make or prepare the crucial decisions. They probably have a reason why they say no or yes. Probably the yes is more important than the no right now. And as a credit manager, as a global credit manager, see the backing of the senior management to support the credit team decisions. It's crucial because you are the specialists, not sales in times of crisis or whatever. Adjust your processes quickly. Don't wait too long. Set up emergency workflow on a flat hierarchy structure. You need emergency workflows. If something goes terribly wrong in a country or with a client or with a set of clients, be quick. Don't wait 30, 60 days. It's not going to disappear magically. It didn't work with that virus. It's not going to work with that crisis. We are all expecting the insolvency tsunami just coming closer. Most governments just had preparations to stop the insolvency tsunami, at least in 2020. We are seeing it we see it building up already, not in a far distance. It's coming closer to the shore. Automate as much as you can. Reallocate FTEs from workload that doesn't spend any value right now. I know you've got probably some collections managers who love to talk to that portfolio. Like I always said, oh, Mary, can you tell me if our invoice has received? Oh, yes, and we can expect an on-time payment. Oh, that's great. Good talk. I hope you stay safe and healthy. Of course, human kindness is important in times of crisis, but probably your collections manager should focus on retrieving data for really complicated customers and probably have a conversation of how we can safeguard the next deal instead of asking for money which would come anyway on time or too late. It is as it is. You might have more important workload to process right now. What shall I say? Introduce a credit management platform that provides a high degree of freedom and flexibility, because what I have said before comes along with a credit management tool. You've got a management of trade credit insurance and credit reference agencies. You might have had the strategy that you buy information for clients in the discretionary limit area, and it is available automated. And now you get a reduction of a cover or a cancellation and the machine can step in and buy external information, probably. And that's just configuration. So you don't need a person to print out credit reports anymore. As an idea, fast decisions via automation. If everything goes according to your expectations and the contractual behavior of the client is acceptable, so paying in time or only a little bit slower than expected, you might automate credit lines to a certain amount without having a authorization process behind that is time consuming. Right? All these facts are really crucial in terms of prices. I know a company that is able to provide a credit management platform within a couple of weeks if it is required, even for complex portfolio situations. Just talk to us, right? And most important part for search and rescue, be confident, and please, all of you, stay healthy. Thank you for your attention. I'm happy to answer questions right now. And whenever you think what I have said is of interest, give me a call, drop me a note. I come back to you as quickly as I can. Thank you very much for your attention so far.
Thank you very much, Wilm. Despite blowing the scheduling completely out of the water, I really loved your example about the harbor authorities, which I believe is interesting. Always these real life examples always make it for me, and that's where your experience really shows. Yeah, we're running 9 minutes late already, and I want to thank all the participants from all over Europe for hanging in with us. So we didn't have that many dropouts, so that's great to see. If you have a question for Wilm, you can unmute yourself now. I personally received a question via the chat function, which I'll post to you, Wilm, which was, I'm paraphrasing now, so a lot of the examples you've given around, okay, what to do now, like the search and rescue part, none of that is simple in a way. And the question was, how would you normally? How long does it take to do these things? Like I just interpret it's about how long does it take to automate, right? You were talking about automation using credit management software. What kind of time schedule do companies who want to leverage that and want to go down this path, what time schedule do they need, right? Are we talking about weeks? Are we talking about months or years?
Professional service answer, it depends. No, honestly, I can be a little bit more concrete here. To already have I would say a mid-sized success of a degree of automation of 60% of your portfolio, you should calculate 8 to 10 weeks in a mature ERP environment. What does mature ERP environment means? You've got at least a system like Microsoft Dynamics or SAP or many SAPs, that doesn't really matter. You've got different systems maybe, but all of them are kind of a standard industry. Yeah? So it's about 8 to 10 weeks and you've got a 60% of automation realized very quickly. If you want to increase that degree to 98.5% of your portfolio being operated automatically, and we had exactly that request a couple of years ago with guys from BP, it might take you 12 to 18 months to get to that target, right? But 60%, I would say, automation within 8 to 12 weeks, 8 to 10 weeks, 11 to 12 weeks. And the rest, 80% will be inside with, I would say, a project running for 4 to 5 months, and then the rest, right? If you go above 80%, you will really have to define and discuss in detail, country by country, legislation by legislation, what is driving my automation quota here. So 60% less than 3 months, 80% less than 6 or roughly 6 months, everything above, very individual. Hope that helps a little bit.
Yeah, I hope that answered the question. Thank you very much, Wilm. Second one, last one I have on the chat just came in. It's about how many trade credit insurances do customers use on average? Is there an average across all our portfolio where I assume, yeah, for a global business, it says?
Generally, you have a core trade credit insurance, which covers your main contracts. And I would say the biggest chunk of your business is covered by one company. And what we see with global acting clients, they do have specialized providers for some specific markets. Mature markets with a kind of a transparency, for instance, the US, they operate an XL policy provided by one of the big three, or AIG in the US or QBE from Australia. So you see, generally, you have one core credit, trade credit insurance, which makes pretty much sense because you can really just concentrate. It's buying potential, nothing else. And you've got for specific markets, which might be a little bit too costly for insurance in a traditional classic way, you very often move to excess of loss policies. That's what we see. In times of crisis, we got 3 requests already for syndication of trade credit insurance. So you are in the lucky position that you've got 2 providers already contracted, and you are able to blend together their covers. So syndication gets more and more interesting. So, but to answer the question properly, generally it's one core trade credit insurance with derivatives on specific markets.
Okay. Thanks a lot. I don't have any more questions on my end. So last possibility. 3, 2, 1, done. Okay. So yeah. So we're 15 minutes late. But at least I said, okay, we'll be finishing 11:45. So we've achieved that. So I want to thank again all the listeners who listened in this morning. I want to wish you all a great rest of the week. As Wilm already said, stay healthy and stay confident, and hope to see you soon again. And thanks, Will.
Great.
Bye-bye.
Thank you, everybody. Have a great day. Bye-bye.